Mortgage Corporation, and she's going to present to you how she can help your clients going through the divorce process. She's been in the industry for over 20 years, and she is wonderful. I can personally attest to having done business with Racheli, and she's just the best.
Thank you. Thank you. Of course.
Good morning, everyone. I'll just go through a little bit of a background of who I am. I'm going on 23 years. A little background about myself. I was born and raised in Israel. I served in the Israeli army, and yes, I do know to shoot machine guns. No messing up with me. Yes, I was a flight attendant while I was attending college. That's a very common thing for Israelis to do because we have different hours, so and we can be over there and work and make a lot of money while we're in school. I've been in the financial arena since 1986 and a mortgage broker since 95. I used to be 65 pounds over what I am today, and my hobbies are health, rollerblading, nutrition. I love to travel. And I love to teach real estate agents. I do a lot of classes in the association and real estate offices about social media and marketing. And yes, that's me. I used to be big.
That's you?
And that's the day I was enlisted in the army. I was bigger, yes. I was bigger.
Doesn't even look like you.
If I'm, these are my two kids, Avital, Yoni, we lost Yoni December a year ago. And Avital, she's a horse girl, loved to work with horses, with PTSD, addictions, and just have fun with horses. This is Moti, my partner. Everybody says they call each other husband, wife, and we approach, and they say, why you're not married? We will. So what do we want to know about mortgages? When there is a divorce and there is a home involved in a divorce, what happens? Who will keep the home? Who will pay for the mortgage? And what would be the ramification with each one of those decisions? And when will each step take place? Unfortunately, I am in this group because of having to serve some clients that went through a divorce, and the divorce settlement had some stipulations there that couldn't be executed. So who cares that it's written there if it cannot be done? So let's see what we do. Option one is selling the home. Each one goes their way. They split whatever the equity is, and hopefully each one of them can go and do what they're doing. It gets a little bit more complicated if one of the spouses keep the home, because most of the time both of them are on title, both of them are on the mortgage. When you go through a divorce and you have in the settlement that one keeps it and the other one goes, you need to vacate the liability from the one that goes. How do you do that? The only way to do that is through refinancing. That's the only way to do that. You can take somebody off of title, not off of a mortgage. Mortgage has to be refinanced. Yes.
Isn't there other ways, like novation, where the bank will let one of the parties and you don't need a refinance? Have you heard of that?
I have not heard of it. I can tell you about my personal situation. I was going through the meltdown of the crisis, and I had a loan modification, and I was going through the divorce at the same time. I did a modification only on me.
We just had this same conversation, and somebody I heard about this in the last week, and I don't remember where I was, but they did have somebody that they were able to do exactly what you're talking about, and get somebody off the mortgage.
Right.
I don't know what the bank was, I don't know what the situation was, so it's
I
something.
don't know how they
Depends
get them
on the
off.
bank.
Yeah, it might be,
Or the
Because
financial institution, whether they'll give
The
you
mortgage is
novation.
a recorded instrument.
right.
There
no, I get
is
it,
no
you're right.
way to remove the recording. The only way, even if they modify the loan, they can modify terms spouse, not the guarantors.
Because the bank doesn't wanna lose owners, so they don't care, they don't wanna do an ovation.
I would check, but I have not heard something like this done. In 23 years, I have not
Well, I've
heard.
heard, I'm doing it
Like,
37.
I'm telling you, in the last week.
Week? Okay,
Yeah.
maybe
And
there's
I'll
something
try
new
and
that
I'll try and research it in my brain where I was.
okay,
I can't remember where it was.
now,
But
when, yeah.
aren't there situations where there's no change in ownership, divorce happens? No change in ownership, no change in obligor, and you might have one spouse that's electing to stay in the house, they're agreed upon.
Yeah.
The spouse can stay in the house for a certain amount of time, and then there's a subsequent sale. Then upon the subsequent sale, proceeds are split. But at the time of the divorce, nothing happens as far as change in ownership, eliminating an obligor.
If it is not on the mortgage, and it is not on the note, and it is not on the title, obviously, there is an agreement that one spouse will remain in the house, and after so many years, months, whatever it is, that person will vacate the home, they'll sell it and split the assets. That's fine. I'm talking about when there is a mortgage on a home, and either the title could be on two people, mortgage could be on one. You cannot do it the other way around. You cannot have two people, two people on the mortgage and one person on the title. Some people, after the fact, do a quitclaim deed, but then the bank could call the clause to a sale because you changed the liability, the title. It's rarely could happen, but if there are issues and they will find out that somebody was removed, they may pull that clause and says, we want it now. So, things to keep in mind. Alimony and child support. They must be received for 6+ months in order to be considered an income for the spouse who is receiving them. If they're looking to qualify on that income, they have to have received it for 6 months plus. If it's before, they can't. And I had a situation with a client, the husband left, he was supposed to come back to the house, but she's in the house until she finds another house to move to. But in order to move to, she needs the money from the alimony. But in the stipulation in the divorce agreement, it says as long as she's in the house, she's not getting alimony. Once she vacates, she will get it. So she couldn't stay, she couldn't leave. She's stuck in the middle. So that agreement has to have a change in it. I mean, there's no other way to do it. Unless she goes and rents a place, you can do that too. But she didn't want to. So to buy a home, you need to have 6 months of alimony and child support received. Quitclaim deed without a refinancing does not relieve the person from the obligation. They're still on the obligation. And divorce settlement must stipulate that the vacating party has no responsibility on the mortgage. If there is a time like the one still stays, they are both there, and at the future time they will vacate. It has to stipulate that the person who left has no responsibility. I had a client, they did the divorce settlement by somebody that didn't know what they were doing, unfortunately.
That happens all the time.
And they said that he needed to quitclaim deed the property to her, which he did, but nowhere on the divorce settlement does it say that he's no longer responsible for that debt. He wanted to buy something else. We could have let him buy something else if it said that he's no longer responsible there. She couldn't refinance, so she couldn't take him off of the mortgage. So he couldn't buy a home. So all those little gotchas that I would love to speak and do maybe even a talk, and maybe you have an idea, and talk to divorce attorneys that can give them a little bit of, a few tips that can save so much headaches down the road.
I got an idea for you.
Okay, I'm willing to listen. So now, what are 5 components of obtaining a mortgage? It's credit, income, assets, the debt to the income ratios, and the property itself. Now, the credit. A minimum credit score of 580 is required to go for an FHA loan. 620 for a conventional. I don't suggest people do a conventional loan with the 620 because they'll eat them alive with the interest rate. They charge them a lot. Jumbos, you need to be over 700. And just recently, and I have in the packets that I have for you over here, the loan amounts for the jumbo, for the conventional increased from 453 to 483 in our area, the South Florida. So we can go a little bit higher.
Question?
Yeah.
How does the criteria change when you have a co-signer?
Whoever has the lowest, that's the one that they go with. So if you have a 700 score and I have a 630 score, and we go together on a mortgage, it will be based on the 630, not on the 700.
So you could be on the mortgage with the better credit score, and you could both be on the deed?
Correct. Yeah, you can do that. Sometimes I do, I split it and I said, look, this is how much it's gonna cost you to have both of you on. And as long as one party, their income is sufficient to cover the mortgage, then we can do it. If it's not, then we need the income, we have no choice. Now, this is something that I'd like you to teach your kids, teach the people, your clients, teach anybody. Every $100 in monthly payment, credit cards, cars, student loans, any kind of loan that appears on your credit, equivalent to $10,000 reduction in the buying power when it comes to a home. So if somebody has $600-700 payments, that means about, it's not exactly, but about $70,000 less in the price of a home that they can qualify for.
That's a lot.
It's a lot. People just don't realize it. It's like, well, it's just $300 car. Yeah, but you want this house, and that house is more. And you just reduced your buying power by $30,000. So keep that in mind. The income. All income documentation that's needed is 2 years tax returns. Yes, we do have loans that you can do with 24 months of bank statements, but those are higher rate, high down payments.
Are they still low doc or no doc loans?
No,
They offer
they
those or
don't.
not?
I wish that they would be back. I think there is a place for it. I deal with a lot of self-employed people. Some of them have real estate, some of them have 20, 30 properties. I'm sorry to say, but it's a nightmare to do a file like that because you have to go and look at how much was the income, how much was depreciation, what can we put back, what we need to take away. For self-employed people, there are some people, because of the complexity of their tax returns, it's not as easy.
Rocket Mortgage says they do in 5 minutes.
We have one.
Sure they do. Sure
We
they do.
have one, and I'll show you later on, and we do have it. We are the home of the 15 days closing, and we do that. We have clear to close after 6 days, 7 days, 10 days. It's amazing. I'm very happy with the mortgage, the Fairway Independent Mortgage that I moved to just in November. If the people are self-employed, you need 2 years of business return, so to show that they've been in business for 2 years. If they've been in business for 5 years, we are allowed to use 1 year tax return. But they need to have been in business for over 5 years. What do we need? On the 1120 or 1065 business return, it says when the company was formed. It's fine. Some people are sole proprietors, they file on Schedule C. So we get a CPA letter that says so-and-so has been a plumber since 1997. It's fine, it's good. We go by that and we can use 1 year of tax returns. Because when we use 2 years, we need to average. And I work with a lot of CPA and clients to, especially with self-employed, because I keep on telling people, I don't know, I have the saying over here, in a second, to have real estate income, you need to have it on the tax return, unless it's a property that you're buying right now, which let's say it's a fourplex. You're allowed to use the 3 incomes from the 3, and you live in 1. We would take 75% of the rental income and calculate it as an additional income to your own income. But it has to be on the tax returns, and depreciation could be added back. I don't see that saying, but I said, CPAs, please leave me some dough on the table, meaning income. Don't deduct everything on the book, so I can make you bread, and I can get you a mortgage. We gotta have to make bread.
That's why we have add backs.
Huh?
That's why we have add backs.
Some we can use, some we cannot. Assets, you need 2 months of bank statements. All the liquid cash, checking, savings, money market, CD, 401, any kind of accounts that liquid in a way that you can go and sell it, it's not real estate. All the funds that we're gonna use for the transaction have to be seasoned for 60 days in the in the statements. Gift funds are acceptable, but must be sourced from the donor. The donor needs to show the ability to give, but it has to be, I can't give Vicky, I'm not related to Vicky, but family member, relatives can give.
There's a maximum, right, that you're allowed to
There
give?
is a maximum, yes. On an FHA, it's 6% of the purchase price. On a conventional, it's 3%.
So if I have $100,000 house that I'm buying, where is that one? But so I can get $6,000 from a family member
If you do
for
an
FHA, or
FHA,
$3,000?
correct.
Or from the seller, they can give you a seller concession.
Seller, you can get a concession up to that amount.
Those are capped also, though.
Now, the debt to income ratio, we are only looking at the accounts that show on the credit report. If you have, I don't know, electric bill and insurance bill and life insurance, we don't look at those. It's only what appears on your credit report. And if an account is paid by the business, and we can show 12 months trail that it was paid by the business, canceled check, electronic payments, we remove that from the liabilities. We don't count it against them because they've already been counted in the income of the business because it was deducted there.
Excuse me.
Yeah.
When a buyer transacts to purchase a home and the seller takes back a note, and the note's not collateralized by the property, does that note have to be, does it have to be recorded, or does it have to be recorded?
If I was giving the money, I want it recorded. I want
But
it
it's
somewhere that
not-
I can have teeth.
What is it, so is it gonna go on your credit report?
If the person is not reporting it, it will not. However, if it's an arrangement between you and I put it in the drawer, nobody knows about it. But if you record it, we will find it. Even if it's not on your credit, we will find it.
Well, securities or something else.
There are some
Yeah.
things that are happening like.
Right. All kinds of deals, you know?
Yeah. We did that, and the ratios need to be as follow. For an FHA loan, the maximum debt to income ratio is 43 on a home. On a conventional, it's 50. But the FHA allows us to go to 56 on the back end, meaning the credit cards, the cars, the other things other than the home. The conventional, it's 50-50. If you don't have any debt, you can do the whole 50 on the house.
We just because I'm sure most people know that with an FHA loan, you also have mortgage insurance.
You do.
So your
It's the
payments are gonna
mortgage,
be
taxes,
higher.
insurance, mortgage insurance. If there's an association, if it's it's a homeowner association.
And it's for the life of the loan, so
The
it's
life
not
of the
always
loan, yeah.
the best option.
So that means that, so I'm sending this to my kids. I am, I really am, because they're starting to think about it. So or a conventional mortgage, it can be 50% of their gross monthly,
Gross monthly income, if they are.
gross monthly, not net.
Yeah, for self-employed, it's the net.
So
For an employee with W-2 income, it's the gross.
On the gifts,
Yeah.
application, we have a client that just made a substantial down payment, for their kids. The boy gets married, and they made, it had to be a 20 to 30% down payment on the home. So I'm not familiar with that gift, the family gift limitation. Now, I don't believe it was a cash transaction, I think it was a
No, they
finance
can,
transaction.
a
Oh, so
family member can give them as much as they want as a
So the
gift.
limit applies to what situation? You said it was a gift limit.
No,
Yeah, but what's that
the
about?
seller can give up to 6%.
or the seller can
The
give
seller.
back.
Oh,
Something
A
else
fa-
is 3%.
I misunderstood.
On a conventional, it's 3%, on an FHA, it's 6%. But a family member, if I wanna give my daughter
There's no
100,000,
limit on
no, on that, no. The implication of, and you guys know the rules, how much off it if it's a gift, how much gift can you give,
Right.
the taxation on it. But as far as a lender, no,
With an $11 million exemption.
yeah.
For now.
So now, this is an example. Let's say somebody makes $100,000, and if we go to $4,000 will be allocated towards the mortgage, and the other liability to get to the 50%. So $1,500, $400 taxes, insurance. So you're at $2,150. So you can have about $2,000 towards the other stuff. Obviously, if they take a much higher mortgage and it's more than $275, then it's more than $1,500 a month payment, then you rework the numbers and see where do they fall. But on a $100,000 income W-2 employee or a business that the net income after we do all of the in and outs, they can get up to $50,000 in payments. Mortgage, insurance, taxes, mortgage insurance, car, credit cards, student loans, anything like that. Now the property. There is single family home, homeowner association, and condo association. This is the tricky one. Sometimes you can have a townhome that could be either this or that. They have an association, but if it's in the legal description a condo, it falls under totally different guidelines to go and buy a condo. Is it a primary residence, second home, and investments? They have different guidelines for single family as a primary or as a second or as an investment. A townhome has a different guidelines if it's one of those things. So we need to know which one it is. And just to give you heads up, I don't know if I have a slide for that. No. Condos in Florida, since the big dump that we had in 2008, and from 8 till about almost 12, we hardly had any mortgages for condos. That's why the condos really tanked. We have mortgages for condos, but they're more scrutinized. You need to go and do what they call a condo questionnaire, where they ask like a page full of questions, and it depends if it's a primary, a second, or an investment, how much down would you put, and if that particular property qualifies for a full condo review or limited. If it's a limited, it's 25% down across the board, the minimum. If it's an investment, 30.
And things that would maybe make somebody want to only do a limited review would be if the building doesn't have reserves, or if there's litigation against the building. There are certain elements.
There's less questions that we ask, in order to qualify. I would say 90% of the buildings in Florida qualify for a limited review, about 10% qualify for a full review.
At a full review, you could go conventional with 5 or 10% down if the building's healthy enough for you to be able to.
So it's not just you, it's the property itself that needs to be healthy enough financially. For businesses, for self-employed, this is something for you guys, the CPAs, when you do your taxes for self-employed people. Check with them, are they planning to buy a home? So strategize, be prepared. Don't just do it and then, okay, we're stuck. You can't buy this 400,000, you can buy 200,000 and they're not happy. But a deduction is not an obligation, it's a privilege. As a self-employed person, you can deduct. And most of us deduct a lot. Okay, we said that. So, first-time home buyers, you can do as little as 3% down on a conventional loan. And there are certain areas, census tracts, and I'm surprised around this area, even though we're in a pretty high-end kind of an area, there are little pockets that you can do those census tract homes with 3% down, reduced mortgage insurance, reduced interest rates. So that's something to know. Now, flipping homes, if you buy a home as an FHA and somebody just bought it, renovated, and they're selling it, it has to be 90 days.
They have to have it 90 days if you're
They
buying.
have to own it 90 days, so 91st day we can do an application. We cannot even do it before, we can not have a contract before. So,
Do you deal with flipping contracts? There's no ownership change, but the investor just has a contract? and then he
usually
flips the
those are
contract?
done on a cash basis or with a private loan. They're not done through the regular channels because they won't qualify.
What's the maximum amount of cash that can be used to purchase a home nowadays? In South Florida,
What do you mean?
a cash transaction,
Yeah. Somebody can do a cash transaction for as much as,
as far as reporting, are there limitations on?
Well, you know, in the county, they have.
Tri-county area has their rules, right?
Well, it's like you have to prove where the income comes if it's for over $1 million. But that's Manhattan and Miami because of the money.
yeah, because of money laundering, you
Yeah,
need to
yeah.
know where the funds come
You
from.
can pay any amount of cash you want, but you have to.
Not
prove
so
the cash.
important.
But
You
gotta
need to
prove-
source the
you gotta
funds,
prove-
basically.
Where the funds come
Source
from,
of
they
funds
come from
from-
work.
Yeah.
Right.
I don't know, so guys saying that it's up to $1 million, you don't need to source it, what, you come with a plastic bag?
Yes, you can.
Yeah,
Up to
suitcase.
$1 million.
I had one
Don't worry about
transaction,
gloves
probably
and
about,
Right.
I would say over 15 years ago, somebody actually came with a bag of
Yeah.
plastic bags
Yeah.
to the closing, like, it was like $70,000.
Hey, I remember years ago they did, they came in with
Yeah.
suitcases.
Yeah.
Back in
I thought the
early
amounts though, I thought the tri-county limit was reduced.
No, there is no limit.
It's
There
not
is
a
no
limit, it's a regulatory order that she can approve where.
You need
Right,
to.
that amount, that cap, I thought went down, so recently,
That
because
I,
of all
that I
the,
don't know, I'll check and
all
I'll
the
let
money
you know.
laundering activity.
We also have Venezuelans coming in with all kinds of stuff. We don't.
Yeah, but
can't trace them.
what they do, they, you know, like they still buy charges.
Look, it's a lot harder to launder money here now.
Yeah, it's a dummy corporation and stuff like that.
Now, can you get a mortgage after a foreclosure, short sale, or a bankruptcy? And especially after a divorce that maybe there were some hurdles and they needed to short sell or they needed to file for bankruptcy, one of them. What do you do? Yes, you can get a mortgage. And in your packet, I have like a little cheat sheet like this. How long do you need to wait after a short sale? If you're gonna do an FHA, conventional, VA, how long do you need to wait? Alan, you don't need to read it, you have it in your packet.
I'm looking at it, it's okay.
Yeah, but for the big one, the short sale, we used to have it 2 years with 20% down on conventional. About 3 years ago, they raised it to 4 years back. Foreclosure, forget about the conventional, you're stuck with an FHA for 7 years. Yeah. Bankruptcy depends if it's 7 or 13, how much you need to wait. And we do have a program that you can basically, there's no waiting periods. Yeah,
What if it's a bankruptcy and a foreclosure?
they look at who is the most that, because they need to combine
could be
both of
7
them. So
years.
whichever one is the worst, that's who they go by. If one requires 3 years, the other one 4 years, they'll go with 4 years.
So they don't add them together.
No, they don't add them together. No. They're combined. So we can do mortgages after those, but they're expensive. They don't, the rates are about 3% more than regular rates. Now I want to share with you some tips about mortgages on your personal, advise your clients what you can do to save a ton of money. This is one. If you pay next month's principal payment, you will save tens of thousands of dollars in your mortgage. Let's say my mortgage payment is $1,500, $1,000 is interest, $500 is principal. If next month is, let's say, the principal is $499 and $1,001, then I can pay the extra $499 and the whole $1,000 or $1,001 is eliminated. What does it do? It pushes you ahead. So that means that if I do that for the first year and I pay each month the next month principal, my balance would show as if I'm in my second year. If you do it for 5 years, it will show as if you're in your 10th year. And you save tens of thousands of dollars in interest using that one. You borrow a little bit, you pay a lot of it. It's about 2.5 times usually how much you pay if you carry a mortgage for 30 years. The next one, bi-weekly payments. Many people heard about it. Or making one extra payment a year has the same results. You're gonna save about 6 years on the mortgage. So if you have, let's say, $1,000 mortgage times 6, it's 6,000 times 12, it's about $120,000 that you save. So it's quite good. Now, this one is something that Charles can, this is from my old days that I came to a financial advisor that said, what if we compare 15 and a 30-year mortgage and use the house as a vehicle to build an asset? So let's say 30-year payment was $1,100. The 15 payment is $1,530. It's about a $400 difference between the two payments. What will happen if for the first 15 years we take $400 and every month we make a mortgage payment, we send $400 to an investment vehicle? We invested $72,000. The next 15 years, we stop making mortgage payments, stop putting the 400. We are withdrawing the mortgage payment, the 1,100. We withdrew 1,100 times 180 months. We withdrew 198. I was so anal about it that I started from 1950 all the way to 2010. I took different periods, different things to go up, down, market, sideways, whatever. So I have 2 examples for you over here. This one was from 1980 to 95, and then we took out from 96 to 210. So it had a few, you can see a few dips in here. But at the end of 15 years, this is an example of something between the worst and about a third, not middle of the way. Because the middle of the way and the good periods were not believable even. But look what happens. At the end of the 15 years, you have this, but because the money is still working for you, this is actually what happened. Does it mean that this will happen now? Consult your financial advisor, work with your CPAs and talk with them. But in this case, At the end of the 30 years, they had a home paid for, and they had a nest egg of $323,000 in this particular scenario. There is another scenario, and again, disclaimer, this is hypothetical, I'm just playing with the numbers. Work with your financial advisors. This is another one. This was a little bit better, but again, it was not even half better. And you can see the other one, it had a little bit more here, but less here. It's a different fund, different period, and look what happened.
Are you incorporating the differential in the rate between the 15 and the 30 in that model, or are you tax affecting the numbers?
I'm looking at the payment. What is the dollar payment that comes out of my pocket?
Right.
The interest rate comes into effect with the payment, how much the payment is in dollars. So when you incorporate that one, you can teach somebody a strategy that they can take some money, provided they have this extra, instead of going to dinners every once in a while, build a small little nest. This is just playing with $400.
Instead of trapping yourself and trying to get that lower rate on a 15-year,
Correct.
pay the higher rate, take the excess funds and
Yeah.
invest it.
The other way you could go, I mean, I should hire you. The other way you could, yeah, there's a couple things too, that $400, put it in either a Roth or regular IRA. Build up the savings that way, then avoids the taxes, right, as far as the regular IRA. And three, they can take $400, pay down the principal. Effectively, at a 30-year, they can pay down whatever principal they want and have shorten their own mortgage at their leisure. Shorten the time frame for paying at their leisure. I always tell people, especially young ones, I say, why get a 15-year for difference than that? You control the ball, you can pay it off as soon as you want.
Less stress.
Less stress.
That 13th payment.
The difference in the
100%.
interest rate these days between 15 and 30, it's not like it used to be like 3/4, 1%. It's not. So,
0.5% maybe.
and then they're strapped because the payment is much larger. I'm saying.
So you're saying take the 30, but at your leisure pay it, try and pay it off in
Yeah.
15.
Yeah,
There's
you
no-
can do that
there's
too.
no- There's no early repayment penalty.
There's no prepayment penalty.
Less principal, interest on less.
Yeah. That's what happened when you prepay the principal, the interest on that principal is poof, gone. That's why you push yourself ahead, and as you're ahead, the ratio between principal and interest at year 15 is much better towards you than year 2 or 3. It's the same payment, but the ratio between principal and interest. Again, talk to your financial advisor. Now, I want to show you this one.
Debbie, Lynn, and Tom. John opened a business not long ago. Debbie got married recently and is living with her husband in a rental apartment. Lynn is a senior attorney in a large law firm. Tom had credit issues in the past, and now he wants to buy a home. They all have one thing in common. They need to be approved for a mortgage to buy a home. John had been in business for only 2 years and had difficulties getting approved for a home mortgage. Debbie and her husband went to consult a banker and didn't get clear answers to their questions. Lynn was extremely busy with work and could not leave the office to meet with mortgage brokers and check her options. Tom had a hard time scheduling an appointment, and when he finally did, he arrived a few minutes late and the branch closed. Each one of them felt helpless and frustrated. Who needs this headache? Can anyone get a mortgage these days? But then, they were introduced to Racheli Refael, who helped hundreds of homebuyers obtain a mortgage, and now she was able to bring solutions to each one of them. John understood what documents he needed and how to position himself to be pre-approved. Debbie and her husband, first-time buyers, met with Racheli and got all their questions answered. Tom was approved for a mortgage. Racheli guided him through the process and got him great terms. Lynn also used Racheli and got prompt, customized, and professional service. Now they are all happy homeowners with a mortgage tailored to their needs. Talk to Racheli. It's like talking to 100 banks. Don't take a mortgage before you consult with Racheli. Let her help you get pre-approved for a home mortgage today.
cable car too?
Yeah. Yeah.
So you should close out with, I understand John and Debbie are having marital problems now.
I need to do one for that.
You need to definitely introduce that.
I need to
Well,
do
you need to sell
one
the
for
house
that.
now.
So, to get pre-approved, we are gonna review income, credit, assets, and the property. And Team Racheli, home of the 15 days closing, and we do that every day. Everything is done under one roof. We are direct lender. And if you still have questions, ask Racheli.
The best presentation.
What?
Vote you the best presentation.
Thank you.
I thought it was
Thank
very
you.
informative, and you know what I liked about it is that literally I'm sending stuff back and forth to my son, I'm going, this is what you need, this is what you need to plan to do, so it's very helpful.
Can you share your presentation?
What do you want me to do? Take a picture?
What do you mean, share it?
Your PowerPoint presentation?
I think if you send it to Connor, they put it,
Email it.
he'll put it on the
Yeah, well,
site.
he'll put it up online for you, just
Yeah.
make sure that he gets it.
Okay.
No, I want to introduce you to a client. I'd like to give them a presentation. That's
Sure.
how presentation, and it's understandable by anybody.
Yeah.
It don't have to be a CPA or,
Thank you. The one thing that I would like, if you're teaching the kids, credit is so crucial. Here's a tip. Don't ever charge more than 30% of your credit limit on a particular card, because that can be a difference of anywhere between 40 and 80 points on a credit score.
Say that again?
Credit cards, if you have a credit card for $1,000, don't use under 300.
So if you have 4 cards, spread it out between the 4 cards.
Yes.
But even if you're paying your card in
It
full
doesn't
every
matter.
month, it
At
doesn't matter.
any point, you still have a ratio that is more than the 30% on the
I
card.
didn't know that.
I think that it's a stupid rule, but
Even if you pay your bill in full every month.
yeah, because at some point during the month,
So I use one particular card,
I do
and then there's another card I hardly ever use. I should really even it out.
again, let's say
you
that
want
you
more.
have a $10,000 card.
If you can remember
But
to
But
pay
if
your
you're
bill.
only using 2,000 or 3,000
It
all
depends
the
on your
time,
credit
it's
rating.
okay. But if you're going to use like 7,000,
Depends on your credit
8,000 out of the 10, your
You're a
score
kid.
at that particular
Yeah,
time will be lower.
So so 1 month I went, I have a $100,000 limit, I went to $85,000, right? Once. How long, so that month.
Once you
my
pay it, it goes back up.
It goes back. Okay.
Yeah, that's
Oh.
why sometimes we have the ability to rescore loans. And I look at it, I'm not just giving you a loan, I'm advising you on how to get the best loan possibly you can. And if your credit score is 660 or it's 740, you will get a
So
different rate.
Kelly, if someone's applying, in the month they apply,
Yeah.
they have credit cards and they have cash in the bank, and you wanna have cash in the bank, with credit cards, you might suggest they spend a little bit of cash to bring one credit card
Correct.
below.
Not
the-
one, that
Or
all,
any credit card
Yeah.
that's more than 30,
Correct.
30%.
Yeah.
You would ask them to bring that down just under that, and that would help them.
yes.
And how long
Got
does
it,
it
I
take
understand.
to get
Some credit cards report once a month, so it depends on their cycle. So at worst, it will take about 40 days. Some credit cards report as you spend and as you pay.
Aren't there games you can play with when you're pulling credit for purposes of debt to equity numbers? I've had lenders in the past say it's always best to just tell me when to pull the credit. Tell me when you make your credit card payments. If you pay in full, you want the credit to be pulled right after you make that payment, so you can have little to nothing on your cards.
Correct.
So there are games you can play to
Correct.
get
In
that
an
number down.
FHA, you're allowed to rescore for a credit score to get a better rate. You're not allowed to rescore to get a better debt to income ratio. Conventional, you can do that. So I say to people, what do you know about your credit? Most people have an idea. I said, do you have credit cards that are maxed? Oh yeah, they're all like up to the zilch. I say, up to the zilch, your credit score, if you don't have any derogatory credit, can be at about 620, 630. And if they're paid, it could be 740.
Is it better if you have an inactive card to kill the card? Or just
No,
make it inactive?
do not close credit
Never
cards.
close an account?
No, because it will reduce your score.
Just let it sit there forever?
Yeah.
How many credit cards you should have?
I say to a person should have probably 3 or 4, it's okay. When I see people with 20 or 30 of them, and I've seen some, it's a little extensive, in my opinion. But everybody has their own. Everybody has their own, I cannot tell people what to do.
So, can we get real quickly to the divorce process, because I think that people don't understand how important it is to bring you into the divorce process
Before it's signed.
And that's where the problem has been, is that nobody thinks what's gonna happen to this couple after this transaction is said and done. And
Correct.
to your point, and we see it, I see it at every chapter meeting all the time, everybody's talking about how, to your point, they executed a settlement statement and then they can't do what they said, right?
Right.
Right, and then that family is screwed, and they can't get the house that they can't do anything. So they're out there.
Stuck
they're
unless
really
they
stuck.
change that settlement.
So I hope kind of I'm sitting here thinking about my kids. You guys are thinking about so many problems, but I hope that you guys are starting to think about this in terms of what the clients going through this process really need to know, because I didn't know this, right? I didn't know all of this stuff today, and so neither do they. And so I think it's really important that we remember that if these people ever want to have a home again and own it on their own,
Yeah.
that they need to bring in a mortgage broker before anybody starts to agree on who gets what, because this is gonna matter, and it's gonna matter in a very big way.
And that's for anybody buying a home. The mortgage broker is the first step. And that's something that it's very hard to get people to come to terms with or understand, because
They want to go look at
they
homes.
want to go look at homes, and it's a disservice to them to take them out before they know how much they can actually comfortably spend. You know, part of the thing is, you know, when people say, oh, I'm approved for this, I say to them, yes, but what do you want to spend monthly on a home? Because that essentially is going to affect the amount of home you can purchase.
I mean, I have some people say, oh, my friend, he got a $300,000 home. I want one too. Well, I don't know your friend's situation. I don't know their rate, their credit score. I don't know what income they had. Where did the income come from? They're self-employed. They're an employee. It's all different.
So I had a case that Racheli was helping me with a client that's gone through a divorce. In the divorce decree, she's getting the house and she's gone through refinance, and
she couldn't qualify.
And she's gone through yes,
Oh,
and take the ex-husband
Out of the mortgage.
Now we talked to Racheli. She said, well, she does not qualify. I have a contract on her house. I'm selling her house now.
You got a contract?
I do.
Oh, Mazel.
I'm selling her house. She called me last night and she's like, well, listen, I spoke to my divorce attorney and she said that we can take, I can sell it because I don't qualify for a mortgage, but now whatever is, whatever are the proceeds.
The equity? She has to split it?
Well, that was not
Stipulated in the...
in the divorce
Oh,
decree. So now she's like, well, my divorce attorney told me to do a quick claim deed. And I'm like, well, I'm not the person to tell you what to do. You have an attorney.
Legal advice?
Right, we
Yes.
can't give legal advice.
No, I'm not qualified. So
Yeah.
now the divorce attorney doesn't think of, well, what if she does not qualify and what's going to happen? They told she's going to,
That's what happens.
You
Nobody
should
thinks
invite
about
that
what
divorce
happens
attorney
to
to
her.
our group.
No.
No,
Yeah.
right?
Until it's all over, and then you gotta fix the problem you have.
Yeah.
Right.
That you.
And you can also, can't somebody hold you, what's the word?
Liable?
Malpractice for
Yes.
Of course.
Not taking appropriate
Zorka.
advice, you can go to the
Appropriate
foreign
counsel.
bar.
Right?
Zorka, what was the value roughly of the house?
the value of 360,000.
All right, so it's not a huge amount.
No, it's not
No.
a huge amount.
When you
but-
said quick claim, I'm
still
thinking
for
that
them.
could be
And
a
she's,
problem.
and then I said, well, she's like, I don't want to spend money. I said, it's only $200 for claim deed. Well, right now, $100 is a lot to me. I mean, she is.
I don't know that he will even sign on a quitclaim deed saying, you didn't get me out. When you get me out, I'll sign.
Right.
But if you didn't get me out, I'm
He's
not
gonna say,
signing.
I'm still on the mortgage.
Yeah.
I want to be off the mortgage.
100%.
Exactly, because
Yeah.
it'll ruin your credit.
Right.
I don't think he will sign.
I don't think it'll do anything.
Quit claiming,
That's
that's
terrible advice.
He's not going to do anything. That's
Good, that's better advice.
So now she needs him to sign the sale contract.
He had signed it already.
He signed it, he's okay, and he's gonna have to sign the CD or the HUD, depends on.
He's going to sign it all.
Okay.
So who gets the
And by
proceeds?
virtue of a quitclaim deed,
How the title company would disperse the
Yeah.
receipts? You know, like, I mean,
There is no stipulation that she owns the house free without him, whatever.
Well, because essentially, if the mortgage is in both their names and they get a purchase price that exceeds the amount of the mortgage, and the mortgage gets satisfied and paid off in full, that's great for both of them, and then it's just who gets what at the end. And so
That's where the confusion
you need the attorney to hash it out so that,
Because
if he was willing to give her the house anyway, why wouldn't he give her the proceeds?
the attorney who's going to do the closing is obligated, if there's no other agreement outside, to take whatever. There's 10,000, he needs to give her 5, him 5. Yeah.
Perfect example of why all professionals need to communicate.
Yeah,
Exactly.
there you go.
I wish that there was like round table before we advise the client. We sit around table and we talk around about the situation, and each one can put something into the table that will be helpful to them.
This is the
there
reason.
is
Yeah.
another very important aspect of divorce and selling the property is the portability benefit.
Yeah.
Who takes the portability benefit?
Oh, right.
Yes, you know, after the sale, property sells.
Yeah, I guess you're concluding, what I would say is this, and since we're all here, is when you're dealing with somebody like this, the attorney is the lead, right? The attorney is doing the situation. You've got to cooperate. Your advisor's got to work with the attorney, work with the CPA. There's a forensic CPA involved with your combined, and look at the whole picture. And it's the same, even without the divorce process, you're dealing with somebody, it's the same thing. You've got to have cooperation amongst the professionals dealing with individuals.
Exactly.
Otherwise,
Yeah.
they're scamming. Right?
Yeah. That's very true.
I've been doing this 36 years, I've seen it over and over again. It's not a hard concept, just do it.
Or you're cleaning up a mess and then somebody could get sued because it damages. Then you need a forensic to.
And then it's malpractice, and then it's.
And you need a
your license.
malpractice lawyer, because you're getting that,
Right.
you're gonna file, so that's gonna cost you. Hopefully you have insurance.
And then it's
What if you
against-
don't carry
Then it goes against your license, and then against, you
Then
know,
they
that's
go into
public
your
record.
assets.
Yeah.
It's-
You're in
it's
big
not-
trouble.
Unless you're judgment proof. You don't have
There's
to.
nothing that can help you recover from what goes under public record about malpractice against your license. There's not a lot that can protect you against
Nothing.
the damage of that causes you income-wise. That's why we're here.
Because everybody sees it,
Yeah, and that's why we're here
and
today.
social media, so you're done.
Right?
So in conclusion,
In conclusion.
we need to work together, and because usually a house is the biggest asset in a divorce, there has to be collaboration, there has to be discussion, there has to be decision before they are signed. Not because I agree and he agrees, we put it on paper. It's not enough.
You have to understand the consequences.
Yeah, the
You should be
consequences
working
too.
with the other professionals,
Yes.
so everybody's communicating.
So,
Absolutely.
For a lot of the times when I am working with a divorcing client and we're listing a property prior to the divorce, I always have the attorney, both attorneys review the listing agreement, because it could have been something that was put in the listing agreement in the additional terms that the proceeds of the sale go to the wife. And, you know, it definitely helps alleviate some of this stress after the math. Because if they are getting a divorce, they will have, you know, they most likely will have an attorney or a mediator or somebody that can legally advise them on these sort of things. So if they don't ask, next time for future to avoid a situation like this, suggest that they have the attorney review it
Well, the
because,
attorney is a review.
Really?
Of course.
and nobody said anything.
They're not going to sign anything because she was in default. We talked to Racheli and I said, Racheli, you have to put an application in because she had a deadline. She had about 30 days to file for refinancing, and Racheli did the job. And we had to follow the timeline. So everything was reported. All the attorneys have all the steps that the wife took, to be put in line with, what was in the report.
And neither attorney discussed how to proceed.
Now, well, I think that was her attorney that missed it because now, last night, we're closing
So we're
15
walking.
days.
Yeah,
She
'cause
calls me
we
and
can't-
she's like, well,
31
we
years,
need
32 years.
Well, we can't legally advise them how
I
to.
can't.
She's been with-
No.
It's not my.
Yeah.
Yeah, they're-
Okay, guys, we're gonna conclude. Thank you very much for your attention. That was a long one.